Good morning, welcome to the market view for Friday the 2nd of May 2014. Starting off with yesterday's trades, in the 30-minute chart we can see that we had a trade, a markup just prior to the manufacturing news. The manufacturing news, as I've said before, I'm not too bothered about being in the market for. It's more like the CPI figures, unemployment figures and interest rate ones that you don't want to be in the market with, and also one in particular today, if I recall. I've not checked yet, but I'm sure that the US non-farm payroll figures are out today as well, and that's one you don't want to be in. But as for manufacturing figures, that type of thing, not a problem. And yesterday we see that we had a signal which then was filled during the news, and then the market trading up to the scalp. And to be perfectly honest with you, I don't think there's an awful lot in this one at all. It'd be very easy for me to say, oh well, there was 20 pips available. Well, that's not the reality. The reality is more likely to be a break-even at best. If we get the 50% after the market settled, we see it trying to move back up to the upside, and again during the 11 a.m. bar, and then we have some potential weakness coming into the market with the red candle here. So 50% below the red candle after the market has moved higher, showing some potential weakness. At best, you are looking at 168.97, just below the 169 level there. The market's breaking that psychological level, and then moves a level. Moves below this level, and continues lower for the trading session there. So the entry price of around 168.97, and you can see there. So you'd be lucky to get away with losing probably about 4 to 5 pips on that. Would be realistic there. So unfortunately, the market failing to hold above the psychological 169 level and moving lower, which it's done for the remainder of the trading session, and come back up to it here during the sort of early evening at 1700, and then traded sideways to lower back down towards these lows thereafter. In the 60-minute charts, the trade is still showing that it's in existence if you were actually trading this one, but it's highly unlikely you would have traded the 60 when the 30-minute had the same signal at the same time there. But if you did, then there's a prospect there that again, we're just drawing the 50% from the first red candle, that it was resulted in a few pips lost there. So that's the market as far as yesterday's trades are concerned. Let's just have a quick look at the daily chart and see what the market holds in the longer term, so we can get some idea and indication of what profits are to be had today. So the daily chart, we can see we've taken out the 16821 resistance, and also the other sort of highs that we have to the left here. These have also been taken out, and the market again struggling with this 169 level, which we can see here. So the psychological level certainly holding there at the moment. The market's had a look through this but failed to hold through at the moment. So it's a case of really seeing what the market does today. We know that we've got to drive through the 169 level, and then on the downside, of course, we've got the 168.50 level as well, which is going to be an area of support now the market's broken out of this sideways trading range. So upside, we need to see the market take out the 169 convincingly. That's with an increase in volume driving the market higher, and on the downside you want to look for support around the 168.50. If we have a look at drawing in a few areas, we can see that we've got 168.32. Should the 168.50 be taken out, then you can see the 62% there is the 168.48, so that 168.50. So I'll just remove that line so you can see where the downside targets are likely to be. We'll leave the 168.21 in there for the time being as well. So that's the downside. Of course, the upside, we need to take out the recent high as well. So let me just draw that in and that's what you want to see there. Market taking out the 169.18 in order to move higher. And finally, let's have a look at the economic news that's to be released today that should move the markets. Let's just remove the markup there. We've got construction PMI from the UK at 9:30. Hopefully this will give the market a bit of a lift as well. And then at lunchtime, it's the biggie before the holiday weekend. We've got the non-farm payroll employment change figures released at 1:30. This will be a very interesting one today, and the unemployment change as well, showing a slight drop there, which is forecast from the Fed there. And then just factory orders and for the afternoon there. So the big one is lunchtime 1:30. You don't want to be in for this one. As for the construction PMI in the UK, not too much of a worry there. Well, that's it for today, for this week. Do keep in mind that there is no trading on Monday. The Forex markets will be open, but there won't be any market view. And no doubt the markets will be thinly traded as well. If you are tempted to trade, generally the market will go in one direction because there's not enough people around to actually sell into it as well. Also keep in mind that the US markets will be open, it's just the European markets that will be closed. So again, like I say, you could end up with markets just trading in one direction as a result of half of the traders being away celebrating the May Day holiday there. Right, well, have a good one, and hopefully the weather will improve slightly and it will be a pleasant one as well. As ever, thank you for your support and also for watching. I will see you on Tuesday next when we record the next market view, which will be the 6th of May. That's it from me. Thanks for watching. Bye.